Happy Friday, everybody. Welcome to today's episode of Crypto with Chris. Today we're going to be looking at this week's price action, and then I'll spend some time walking you through how to add some macro indicators to your Bitcoin chart for additional insight. But before we get into that, I wanted to first remind everybody to follow my Twitch channel so that you can get alerts and also comment in the chat. You do need to be a follower in order to comment, and I'd love it if more people did comment so that we can make this a bit of an interactive show. Secondly, if you go to my Twitch channel, you'll see that there are only 2 or 3 of my past episodes. This is because Twitch doesn't really allow me to store videos beyond 7 days yet. So if after each show is completed, I actually upload all my upload all my videos to my YouTube channel so that they can still be accessible. So go check out my YouTube channel for old shows if you're interested. And then lastly, I made a Telegram alerts channel so that you can get notified whenever I'm going to be on a show. I sometimes do shows for Real Vision as well, and my Telegram channels where you'll get notified for all those. All the links to all these channels is in the description of each video and also in my general Twitch channel. So check those out. And with that, let's get started. So actually, hold on. Before we get there, since I'm only using one monitor right now, which sucks, I have to use my phone so that I can see the chat. So, all right, here we go. Got it. Okay, price action. Yeah. Well, let's start. Let's start on. Actually, let's start on the monthly. The monthly. We kind of touched on the monthly last time on Monday. Um, Monthly is still fine. Monthly is still sort of in an uptrend. Monthly still bounce off the 10-week moving average or 10-month moving average rather. Not so bad there. It still is structurally intact. I'll take that. But once you start digging into these lower time frames, the picture starts to change quite dramatically here. And really recently, actually, in just on the last hour or two, we had a presser from Jerome Powell that has since kind of flipped the market upside down and turned everything bullish. So we were holding support on this weekly candle body right here, but just like in the last little bit, we've ducked down below it. So I don't know. I think that's just kind of going to be intraday price action. I don't really expect that to kind of break the markets or anything just yet. And really, if you look at it, like if we look at the here, let me change this. If we look at the historical Bollinger Band, I had touched on this graph a while back before we had the volatility shakeup. And even with this sort of breakout that we've had, really we're still almost back to we're still like the second least volatile Bitcoin has ever been. So it's like, yeah, we had a big move, but in terms of overall volatility, historic volatility compared to previous years and previous eras of Bitcoin, we're still just barely into second place now. So still not very volatile at all. Still, the Bollinger Bands on the weekly are very tight. We could still see significant moves in lots of different directions. So, yeah, with that, if we kind of go back to this, look at this on the daily. Here's where we are right now. Like I said, just dipping below, but overall, we're basically trending sideways. We're not really doing much. We've poked lower than this a few times already in this last week. This is still really ugly though, in terms of what I wanted to see coming into a cycle low, compared to all these others, like I pointed out, where we really just kind of do have this like sort of V-shape bounce, into the low and into the cycle and into a new cycle. This sideways action is super just it's confusing. And really, I kind of come back to we're still waiting for ETFs, like I say every week, I feel like. But the thing is, that's looming large now. That's actually going to be in less than a week. We'll be coming into this deadline, and which I'm sure is going to be a delay, and then we're going to go sideways for another month after that. Or something, or we could do kind of like I've been talking about, where we do this run up and then bounce back over. We basically just kind of go sideways, or maybe have this arcing sort of trajectory. But I feel like the longer we go sideways here, the longer this takes to resolve, the more likely we're just going to go down from here. So I don't really know what to do with that. There's indications going both ways, but right now we're just sideways. And I think we're going to hold this weekly candle body support basically for a while now. If we look at Ethereum, or I'm sorry, Bitcoin to Ethereum, we can see that Bitcoin is still the dominant player. I'm really kind of only paying attention to this weekly. I was expecting ETH to kind of dip down below here some more. I was sort of surprised to see this, but if you look at this closely, if you look at this more closely, you can see we're still holding this trend. Like the 20-week moving average has leveled off a little bit, but we're basically still technically in a downtrend. This is like structurally, this is a downtrend. It hasn't even really come back and sort of mean reverted at the middle of this yet, and these bands are getting tighter too. So until proven otherwise, until we start getting closes above this, ETH is not the play right now. Bitcoin is still the dominant play, and I think Bitcoin is going to continue to be the dominant play for the remainder of the year. Um, but I did want to kind of point that out. Also, looking at Bitcoin from a cyclical level, I did move this to day 68 just because we had this kind of big green candle coming out of there. But now, we've completely reverted back to where we were. It's even more cloudy, although we are sort of bouncing off the 10-day moving average now that the 10-day moving average has come down to kind of meet price. It's sort of serving as resistance at the moment. And so that's going to be interesting to see how that unfolds over the coming days. But looking at price action, just on price action alone, it's really difficult to kind of see what the market is cares about. So in doing that, I wanted to take a look at what the derivatives market thinks too. Um, that usually kind of tends to give me an indication of where people are betting anyway. And right now we have seen open interest tick back up to the bullish side, which honestly I'm a little surprised at. I didn't figure people would be longing so quickly out of this, but I guess maybe, well, actually, let me go back. I can tell you why that is. Really, on the daily level, Bitcoin is still really oversold. It's oversold on the RSI. It's oversold on the momentum oscillator here. And yeah, it just, it's oversold in terms of it blew way outside the Bollinger Bands, and it's basically just now kind of recovering and leveling out. And like I said, the 10-week or 10-day is kind of, just starting to form resistance now. So you would think based on that we would get at least a reflexive bounce, even just from a technical standpoint. So I think that's what the derivatives market was betting on when they would look at this. But we can see here, yeah, funding rates have crept up. Open interest, however, hasn't really. It's basically it's crept up a little, very little, but it's mostly been static ever since price dipped so hard like that. So it's like, yeah, the people that are dipping their toes back into the future, the derivatives market, they're betting to the upside, but it's still a very small fraction of the amount of open interest that we had, leading up to this before everybody got liquidated, basically. And so now that everyone has been flushed out of that market, we're just looking at, people starting to just kind of get back in. But OI is actually as low, maybe is as low as it's been all year. Let's see. Um, okay, no, yeah, it was lower, but it's as low as it's been um, since March. So since that initial second pump out of that cycle. So I think this is going to go sideways for a bit. I think it'll slowly creep back up, kind of like we said. But there's a lot of macro factors right now that are holding price down, and that's what people are factoring in. And we're going to get to that here in a second. But in the meantime, we can see that the derivatives market, while slightly bullish bias in terms of open interest or in terms of funding rates, isn't really getting back in at any major level yet, any notable level. So. Um, all right, let's look at talking about macro. I wanted to kind of go through a few things, and since price action is so boring, go through a few things that can show you how to add some macro insight into your charts so that you can sort of glean what's going on and what maybe is driving this price action, and get a better sense of that. So normally when I say um, macro insight, well, let's see, let's start with a blank chart here. So we're going to create a new chart. Um, so when I say macro, what do I mean? Well, there's all kinds of things that sort of drive price action, but I feel like four pretty core indicators or three really core indicators, three and four, that really paint a very clear picture of what's going on from a macro standpoint. And really, that's central bank balance sheets, or uh, more specifically, like global net liquidity. And when I say global net liquidity, I don't mean liquidity of, like, every central bank on the planet. There are plenty of organizations that do track that and ways to get that, but really I'm talking about just kind of the biggest, like the top five central banks, that being the U.S. Central Bank, the Bank of Japan, the Bank of China, the Bank of England, and the European Central Bank. And so tracking that liquidity is a really good way to sort of basically just see how much money is flowing around in the system. And so what you can do there is, if you have a blank Bitcoin chart, let's get rid of this volume. Let's get rid of this too. Okay, so here's just like a blank Bitcoin chart. So what you do, actually with liquidity, it's very easy. You just add it as an indicator because there's already a handy indicator. So you just go global net liquidity. And I've kind of touched on this in previous videos, but I wanted to spend some time just for people that are new to TradingView to get a better sense of how they can kind of make a quick sort of macro dashboard on their Bitcoin chart to sort of help get a better sense of what's going on. Because if you're if you're into real vision like I am, you already know this. But like if you're not, and you're just kind of looking at charts, and you're new to charting, and you're new to crypto, crypto is macro, and macro very much drives all of the global markets, and crypto is no different. And so by tracking key macroeconomic indicators, you can basically know what's going to happen with crypto, and pretty much with everything else for that matter too. So that's why I do this, and that's why I think it's important. So let's start with global net liquidity. When you first load this indicator, it does load it into a separate pane by default. So I usually just right click on the actual line and just say move to existing pane above. And now it's integrated into this. Make sure they're both on the same scale, log scale like this. And so let's start with this one just to kind of see what we're looking at here. We can see if we sort of zoom, oh, let me change, oops. I want to change this to the overall crypto index. Okay, and change this to weekly. So if we look at this, we can see that, yeah, Bitcoin obviously has a higher beta, but like Bitcoin, the trajectory of Bitcoin very much follows, global net liquidity, very, very closely. And so, and really it drives it. Net liquidity is what drives, like I said, crypto and everything else. So as liquidity goes, so does Bitcoin, so does everything. So having this chart, having this indicator on your chart is really going to, if you wanted to get by with just one of these, this would be the one you would use. This would be the sort of global macro indicator that would tell you everything you needed to know. But if you wanted to add a little bit more nuance and a little bit more insight, you can add a few others. And so the next one we're going to look at is the business cycle. And so to do that, we're going to add a new chart. So we'll go up here to this plus sign. And what do I mean by the business cycle? I mean, well, a good way, a sort of good proxy for the business cycle is the US ISM Purchasing Managers Index. And you can also look at like a global Purchasing Managers Index to give you a more global sense. And with Bitcoin, maybe that makes sense, but this one works fine just as a new proxy also. So you'll see this one here, but if you don't see this, you'll type in the symbol USCB. If I could type, I can never type with this. Oops, yes, sorry. Let's try this again. USBCOI. USBCOI. And so now you have these options here. Same percent scale, new price scale, or new pane. I like to pick new price scale, and I'll show you why. So you pick new price scale, and it basically, so it's going to add a new scale here on the side. And that way you can adjust it independently, which I like. And so, but for now, I'm going to put it on auto. And for now, let's take the liquidity off just so we can sort of get a better look at what we've actually done here. So the Purchasing Managers Index is basically a reflection of the business cycle and what manufacturing, purchasing is happening. Basically, this tells you when companies are building and taking on orders and buying new inventory, buying new raw materials, things like that. So if you change this to monthly, it's recalculating. This particular chart, is kind of more easily viewed on the monthly, but you can see So these are sort of the business cycles. They go roughly every 3.5 years, give or take, and they do very much coincide with cycles. Granted, we had this huge uh, deviation down here. This was from COVID, but we can see how basically it had started to bottom and it was pumping up, and then COVID, the pandemic happened and it nuked, but then it basically recovered and continued upwards. So I ignore this here in terms of the bottom, but we can see, it's a chunk. It's every 4 years or 3.5 to 4 years, give or take. So you can use this to again get a sense of when is the global markets going to be going up? When are the global markets going to be going down? Um, and I like to have this because this basically is yet another reflection of sort of macro health and where in the business cycle we are, and when it's time to buy, when it's time to start to take profit, when it's time to look for peaks, when the bottom is in, et cetera. And so having this, I think, is a really, really key indicator. Let's turn this one off now. And then lastly, another one that I like to look at is just the dollar index, the Dixie or DXY. So basically, you just type in DXY. Any one of these will work. And then same thing, new price scale. So let's add this in. And you'll notice the dollar index actually is sort of the opposite. It works, because as the value of the dollar goes up, basically that just makes assets worth less. And so sometimes it's sort of confusing when you have this chart that's working. It's sort of the opposite. You've got a peak here and a valley here. So what you can do in this case is you can actually invert it. So if you just kind of go over to this price scale here on the left, right click on it and say invert scale, and now it flips it upside down. And now it's much more sort of in line with what you're looking at on the Bitcoin chart. And you can kind of tweak it so that it lines up a little bit better. Um, and so, yeah, this basically right now, dollar go up, Bitcoin go down. But now since this is inverted, it sort of follows the same general curvature of all of the other markets. And so you can see this also, again, will give you a better idea of what's going on. Now, the dollar isn't going to be the leading indicator. The dollar is more just a reaction of a low liquidity environment. So when you have liquidity going down, generally, people flock to the dollar, and so that's what we see: liquidity go down. Again, dollar go up, but since this is inverted, this is what it looks like. So now, if we add them all in, it's a bit of a mess. And also another thing, we can change the colors here because some of these colors are the same and it gets confusing. So if you right click on the line, just go to settings. Let's just change it to a different color. Let's change this to blue like that. And then we can change this one to whatever, red, let's say. Okay, and then now, and I'll say if you want to kind of spice up your chart so that you sort of know what you're looking at, you can actually go over here and add names. And I like to do anchored text because if you do unanchored text, it moves around when you scroll and when you pan around. But if you do anchored text, it'll just sort of keep it in one spot. So you can make yourself like a little legend, let's say. So let's say we'll type liquidity and we'll change the color. Oops. Change the color to match the liquidity here. And we'll put that at the top, and then we can make another one. We'll call it Dixie. Change that to red. Put that there. And we'll make one more. And we'll say PMI. Change that to blue. And where'd it go? Here we go. So now we have kind of a little legend, and that'll just stay. Oops, my mouse is stuck. Now that'll just stay fixed. And so now whenever you scroll around or pan around on this chart, even if you lock in all the scales, it'll just stay fixed. So that way you'll have kind of a reference. And sometimes it's confusing to have all these on at the same time. I don't generally do that, but it is nice to sort of, you can toggle them on and off. You just click the little eyeball here, like so. and that toggles these on and off. And so that gives you a better sense of what's going on. So what's going on? Well, I know Jerome Powell came out just a little bit ago today in from this Jackson Hole press conference and said that they were potentially going to continue to raise rates or open to raising rates, continuing to evaluate everything, saying that inflation is still high, all that, which basically caused everybody to freak out and caused markets to go a little wonky. So if we look at some of these, basically that pushed the dollar higher. I like actually this chart here is kind of one that I've been looking at. So that pushed the dollar higher. This is kind of a different sort of chart in that this is basically a Dixie based chart. So the Dixie is the candle chart. And instead of inverting that, I've inverted the liquidity um, so that it sort of follows the same trajectory. And we can see, again, dollar go up, liquidity go down, even though it's up. Things like bond rates go up because people flock to bonds, and other sort of big US Treasury assets, which increases the value of the dollar, which makes, this going up here. And basically liquidity comes out of the system. So it all is intertwined, and having these type of macro charts up, I think, is a great way to get a sense of what's actually going on. Because if you come over here and just look at this Bitcoin chart, you're like, what's going on? What's going on with Bitcoin? What's going on with crypto? You need to kind of look at everything else too. You need to look at stocks. You need to look at the major sort of U.S. stock indices and see. Here's all three of them here: SPX, Nasdaq, S&P, Nasdaq, and Dow Jones. Of course, they're all down today too. Again, it's all correlated. It's all macro. It's all everything. And I have the liquidity chart here on the Nasdaq too, just for reference. But it's all tied together. So yeah, so that's what we're seeing. And I feel like that's a really important thing because I know people who just get into crypto. If you were like me when you got into crypto, 6 years or so ago, you didn't know what you were looking at, what anyone was talking about, why crypto was moving up or down or anything like that. And I started learning how to do charting and technical analysis, and I learned how to interpret a chart, but I didn't really know what was driving everything. I didn't have the full picture of what drove markets and things like that. And so I think it's important to introduce these other types of macro indicators into your charting so that you can get a better sense of what is driving what. So that way, instead of just looking at a chart and wondering what's going to happen or why is this happening, well, this is why it's happening. This is what, this is telling you exactly what's going on right now. And so um, this is important, and so if you go back to this chart, you can make this handy chart like this. Again, you can toggle these things off. You can get rid of the volume altogether. So like you don't need a ton of stuff to know what's going on. You don't need all these fancy subscriptions to understand. I mean, it helps to kind of gain insight, but like in terms of if you just want a quick snapshot of where the world is at and what's going on in the world and what's driving price action, um, this is everything you need to know right here, honestly. And honestly, like I said, you don't even need all of this. Like the business cycle and the Dixie are, they're important, but like liquidity, liquidity, liquidity. This is going to tell you everything you need to know. And if you just have one, have it be this. And this isn't going to change until Fed policy changes, until something breaks in the economy and they have to pivot, or until some other global economy crashes and they have to pivot, and basically start printing more money. Basically, that's what this is. This is the sort of net balance sheet of all the major central banks on the planet that matter. And the nothing happens until they start printing more money, basically. And so we're going to have to just kind of wait it out. So yeah, and it's very possible that in the coming weeks, outside of an ETF approval, this isn't going to move. This isn't necessarily going to flip back to the upside. And so what happens when this doesn't flip back to the upside? Well, typically price comes back down to meet it. You know, Typically we see overshoots like this, and then, price will come back down to sort of meet the general liquidity level. I'm not saying we're going to go into a year-long bear market. I'm just saying that, based on this liquidity chart, one could argue that we might see a bit of a round trip happen back down to our yearly open. And is that crazy? No, because it happened here in 2015 too. It bottomed out, and then it came back down, and 8 months later, what do you know? Right about now, it bottomed out again. Um, so certainly not unprecedented. I think we had this here too. This cycle was a little bit different because it blew way up out of here, but it almost bottomed out. Granted, that was because of the pandemic, and do I think that would have bottomed out otherwise? Probably not. But we almost had a round trip here too. It took a little bit longer, but I'm saying it's certainly not out of the realm of possibility. So yeah, again, outside of an ETF approval, it's possible that we could see a downturn. Now, one thing I'm paying attention to here is the business cycle, um, and so well here I've got a little bit better chart of it that I like. So this one here, this is the same business cycle I was showing, but it's kind of broken out with some additional markups on it, so you can kind of get a sense of where we're at. Like I said, it happens roughly every 3.5 years. And we tend to bottom out on average 22 months into it. Not always, of course. Nothing is the same every time. But this last month, so the month of June was the 22-month mark, and it has since gone up since then. We'll have to wait another 6 days to see where we stand in this next one, but it looks like we're kind of forming a bottom here, basically. And so if this starts to round up, this is a reflection that the economy is doing better, that more people are buying, that more people have money, that manufacturing is picking up, that supplies are picking up, inventory is picking up, things like that. So this will indicate a healthier economy, which will ultimately lead to the Fed changing its policy. So you could almost look at this as being sort of the leading indicator, and the liquidity being the measurement of what the Fed does as a result of that indication. So once the Fed identifies that the business cycle is improving and the economy is picking up and that things are happening, um, it's likely to change. So I think we're in the early stages of a reversal here, but we know that basically in this first year of a cycle, not much happens, and it can be very volatile, and it can round trip, and just that's how it goes. So don't freak out, stay patient, just kind of if you don't want to ride this all the way back down to the bottom, kind of keep everything I've said in mind, and know that outside of anything major happening, there's a plausible scenario where that does happen. And so whatever if your time frame isn't that long, here's where you maybe look to get out. If your time frame is 4 years, then don't do anything, then stay put. It doesn't matter. It doesn't matter if this happened here, this happened here. Likely if you tried to play this, you would have been chopped up, and you would end up losing money, and then you would have less money to ride into this bull run. Same thing here. If you tried to play this, you probably would have gotten really chopped up, and you'd have lost money, and then you'd have missed out. So if your time horizon is 4 years, if you're just going to ride this cycle to cycle, none of this matters right now. What I'm saying, it's just noise. But if your time frame is shorter, and you do want to be more active trader, I think you need to pay attention to what's going on in terms of liquidity, because clearly liquidity is saying that there's nothing holding this price up right now, and it's likely going to come down. Now, does that mean it's going to come down all the way to the bottom? I don't know. Does that mean it's going to come down to this support level here? Potentially. Like I talked about in the last video too, there's these other support levels I've identified. So we could get a 30% correction, which would put us back down to here. That's very normal. That happens all the time in Bitcoin. That's very plausible. To me, that almost makes the most sense. So that's sort of what I'm looking for. But also we could come all the way back down here. Also, we could get a 50% correction, which would set a new low. Again, I'm not here to make predictions. I'm just telling you sort of what likely scenarios are, and how this could play out, and what the factors are that are going to be driving this price action, so that you can kind of factor all that in, and try and make an informed decision, and learn how to track this stuff yourself. So I think that's a good note to end on. Hopefully, you can throw together a little macro dashboard here and add yourself in some macro indicators. Remember about the inversion here on the Dixie, and yeah, I think if you made a chart like this on your Bitcoin chart and maybe just looked at one of these at a time instead of all three of them, or you can leave them all up like this, that will give you a huge leg up on sort of what the market is going to do and give you some insight on what you can expect going forward. So hope this was helpful, and yeah, and have a happy weekend, everybody, and I will see you again on Monday. All right, thanks. Bye.